Welcome back to our channel. Today, we're diving into the world of investments to expose 10 so-called good investments that are actually total scams. These schemes often prey on our desire for financial security and wealth. If you're looking to protect your hard-earned money, stick around. And don't forget to hit that subscribe button for more valuable insights and tips on smart investing. Number 1 on our list is for-profit schools. You know, those places with the flashy commercials promising you a six-figure salary right after graduation? Yeah, not so fast. These schools often target people who are eager to improve their lives, maybe looking for a career change or a way to boost their income. They dangle these big promises of high-paying jobs and a brighter future, but the reality is often much different. Many students who fall for these tactics end up drowning in student loan debt with a degree that doesn't even guarantee a job. In fact, the graduation rates at many for-profit schools are significantly lower than those of public colleges and universities. And get this, a study by the Department of Education found that graduates from these for-profit schools often earn less than those who go to community college. It's like they're setting you up for failure. Look, I'm not saying all for-profit schools are bad, but it's crucial to do your research. Don't just buy into the hype and the fancy marketing. Look at their graduation rates, their job placement statistics, and most importantly, talk to actual alumni. You have to be your own advocate and protect your financial future. Let's talk about those social media MLMs or multi-level marketing schemes. They flood your feed with pictures of people living the dream, driving fancy cars and traveling the world. They make it sound so easy, right? Just sell some products and recruit a few people, but the reality is far less glamorous. Research shows 99% of people in MLMs lose money. These schemes benefit the few at the top while most struggle to break even. They prey on those seeking financial freedom like stay-at-home parents and students. MLMs are not a sustainable business model. They rely on constant recruitment, risking relationships. Remember, there's no such thing as easy money. Let's talk about individual stock picking, popular with trading apps and online forums. It's tempting to think you can beat the market by picking the next hot stock. But the truth is, individual stock picking is incredibly risky, and most people lose money. They lack the experience, knowledge, and resources that professional investors have. Professionals spend years studying the market and have access to sophisticated tools. Instead, consider a passive approach like investing in low-cost index funds. Index funds offer instant diversification, reducing your risk. They have a proven track record of delivering solid returns over time. Remember, investing is a marathon, not a sprint. Cryptocurrency, the digital gold rush of our time. It's been hard to ignore the hype surrounding Bitcoin, Ethereum, and all the other cryptocurrencies that have exploded in popularity in recent years. You've probably heard the stories of people becoming overnight millionaires, buying Lambos with Bitcoin, and living the high life. And while it's true that some early adopters have made a fortune in crypto, it's also true that many others have lost their shirts. The cryptocurrency market is incredibly volatile, with prices swinging wildly up and down. This volatility makes it a breeding ground for scams and pump-and-dump schemes, where groups of investors artificially inflate the price of a coin before dumping it on unsuspecting buyers. Another risk factor is the lack of regulation in the crypto space. Unlike traditional financial markets, which are heavily regulated to protect investors, the crypto market is still largely the Wild West. This lack of oversight makes it easier for scammers to operate and for investors to get burned. Now, I'm not saying all cryptocurrencies are bad or that you shouldn't invest in them, but it's crucial to approach this market with extreme caution and to do your due diligence before investing a single dollar. Invest only what you can afford to lose, and be prepared for a bumpy ride. Let's talk about something that's marketed as a health investment, but is actually a waste of money: cleanses and detox products. These products are everywhere, promising to rid your body of toxins, boost your energy levels, and help you lose weight effortlessly. They come in all shapes and sizes, from juice cleanses and detox teas to supplements and even foot pads. But here's the thing, your body is a self-cleaning machine. It has its own built-in detoxification system that works perfectly fine without the help of expensive products. Your liver, kidneys, and digestive system work tirelessly to filter out toxins and waste products from your body. There's no scientific evidence to support the claims made by these cleanse and detox products. In fact, many health professionals argue that these products can actually do more harm than good. For example, juice cleanses often lack essential nutrients like protein and fiber, which can leave you feeling weak, tired, and with digestive issues. Detox teas often contain diuretics and laxatives that can lead to dehydration, mineral imbalances, and even dependence. Instead of wasting your money on these products, focus on making sustainable lifestyle changes that actually support your health. Drink plenty of water, eat a balanced diet rich in fruits, vegetables, and whole grains, get regular exercise, and manage stress. Timeshares, those vacation ownership programs that promise a lifetime of luxurious getaways at a fraction of the cost of traditional hotels. Sounds too good to be true? That's because it often is. Timeshares can seem appealing at first glance, especially when you're sitting through a high-pressure sales presentation, sipping on free margaritas, and dreaming of exotic vacations. But before you sign on the dotted line, let me tell you why timeshares are often a financial nightmare. First and foremost, timeshares are not investments. They are not assets that appreciate in value over time. In fact, they depreciate the minute you buy them, just like a car. Secondly, timeshares come with a boatload of hidden fees and expenses. You'll be on the hook for annual maintenance fees, which can increase significantly over time, often outpacing inflation. These fees can quickly turn your dream vacation into a financial burden. And if you ever decide to sell your timeshare, good luck. The resale market for timeshares is notoriously illiquid, meaning it's extremely difficult to find a buyer willing to take it off your hands. So unless you absolutely love the idea of vacationing in the same place at the same time every single year and paying exorbitant fees for the privilege, I'd steer clear of timeshares altogether. Next up, let's talk about one of the oldest scams in the book, Ponzi schemes. These schemes are designed to defraud investors and are often disguised as legitimate investment opportunities. They typically promise high returns with little to no risk, which is a huge red flag right off the bat. Here's how they work. The scammer, often a charismatic and convincing individual, will use money from new investors to pay returns to earlier investors. This creates the illusion that the investment is generating profits, attracting even more investors into the scheme. However, there's no real business or investment activity happening behind the scenes. The scammer is simply using money from new investors to pay off old investors, all the while pocketing a hefty chunk of the cash for themselves. These schemes can go undetected for months, even years, as long as new investors keep pouring in. But eventually, the house of cards collapses when the scammer can no longer find enough new investors to keep the scheme afloat. When the scheme collapses, most investors lose their entire investment. To avoid falling victim to a Ponzi scheme, always be wary of investment opportunities that promise unrealistic returns with little to no risk. Let's move on to penny stocks, those seemingly cheap stocks that trade for less than $5 per share. They often lure in inexperienced investors with the promise of quick and easy profits. After all, who wouldn't want to turn a few $100s into thousands or even millions overnight? However, the reality is that penny stocks are incredibly risky and volatile. They're often associated with small, unproven companies that have little to no track record of success. Many of these companies operate in obscure or highly speculative industries, making it difficult to assess their true value or potential. Another risk factor is that penny stocks are highly susceptible to market manipulation. Due to their low price and small market capitalization, it doesn't take much money to move the price of a penny stock significantly. This makes them an easy target for unscrupulous traders who engage in pump-and-dump schemes. They artificially inflate the price of a penny stock through false or misleading information, attracting unsuspecting investors who then drive the price even higher. Once the price has reached a certain level, the manipulators dump their shares for a profit, leaving everyone else holding the bag. Now let's talk about real estate flipping programs, those seminars and workshops that promise to teach you the secrets of buying low, selling high, and making a killing in the real estate market. These programs often prey on people's desire to escape the rat race, achieve financial freedom, and become real estate moguls. They lure you in with slick marketing, testimonials from supposedly successful students, and the promise of quick and easy profits. They make it seem like anyone can become a real estate tycoon, regardless of their experience or financial situation. However, The reality of real estate flipping is far less glamorous and far more challenging than these programs make it seem. Flipping houses successfully requires a unique combination of skills, knowledge, experience, and a bit of luck. Many of these programs gloss over the risks and challenges involved in real estate flipping. Before you shell out thousands of dollars for a real estate flipping program, do your research and consider all of your options. Finally, let's talk about investing in gold and precious metals, often touted as a safe haven asset class during times of economic uncertainty. While it's true that gold has historically held its value over time, there are still risks and potential pitfalls to be aware of when investing in this asset class. One of the biggest risks is dealing with unscrupulous dealers who overcharge for their products or mislead buyers about the true value of their holdings. Some dealers may try to sell you overpriced collectible coins or bullion at inflated premiums, claiming that they're rare or highly sought after. They may also pressure you into investing in gold IRAs or other complex investment vehicles that come with high fees and hidden costs. To protect yourself from shady dealers, it's crucial to do your research and work with reputable companies that have a proven track record in the industry. Look for dealers who are members of professional organizations like the American Numismatic Association, ANA, or the Professional Numismatists Guild, PNG, which have strict ethical guidelines and standards for their members. Another option is to invest in gold through exchange-traded funds, ETFs, or mutual funds that specialize in precious metals. That wraps up our list of 10 investments that are actually scams. Protect yourself by staying informed and doing thorough research before making any financial decisions. If you found this video helpful, please give it a thumbs up. Your support helps us create more content like this. Don't forget to subscribe for more insights into the world of finance and investing. Share this video with friends and family to help them avoid these pitfalls. Thanks for watching, and we'll see you in the next video.